Elsewhere, General Motors has come a long way, of course, since it was bailed out by Uncle Sam 5 years ago. Before today's opening bell, the automaker reported profit rising by 2% from a year ago. But earnings did fall far short of Wall Street forecasts for last quarter. General Motors took in 67 cents a share, way off the expectations of 88 cents a share. Revenue was just shy of estimates. And despite those weak results and an initial sell-off this morning, investors did a U-turn on that stock. It ended the day just 1 cent lower per share. Phil LeBeau has more on why General Motors is still attracting investors even though earnings shifted lower.
It's not often a company falls short of expectations and is given a pass by Wall Street. But that's what happened today for General Motors. Its fourth quarter earnings were well below estimates. And yet, Wall Street took it in stride.
Piling on today seems a little bit overdone. We expect some better results and some of the one-time stuff that appeared in the quarter to start to dissipate throughout 2014.
GM says earnings fell short of estimates due to a higher tax rate and the cost of restructuring operations in Europe, where the company cut losses in half last quarter.
We're executing to the plan that we laid out in 2012. We really got significant traction in 2013 on the cost side of the business. We narrowed our losses by $1.1 billion.
If GM can finally make money in Europe, it would be profitable in all of the world's key markets. In China, sales hit a new high last year. And in the U.S., GM's profits surged almost 40% in the fourth quarter, thanks to new models selling at higher prices. On a conference call with analysts, CEO Mary Barra said she's not taking her foot off the accelerator.
As we look at what the marketplace and what really the customer is looking for in the vehicle. So I feel very confident that we've got a good product cadence as we go out through the next several years.
Skeptics point out GM's market share is under pressure, both here in the U.S. and around the world. And historically, GM has struggled to keep costs in check over an extended period of time. Barra knows the bottom line for GM is making money. And to drive home that point, she repeatedly told analysts today, General Motors needs to be profitable wherever it does business around the world. Phil LeBeau, Nightly Business Report, Chicago.
By the way, an interesting comment today about General Motors from the automaker's longtime vice chair, Bob Lutz. He says despite loving GM, there is another automaker that's turning heads.
I think they're, by and large, doing have the best product lineup of any manufacturer globally right now in terms of value for the customer. But when you look at who's doing a great job, who's the world's biggest, who's the most profitable, who's expanding everywhere, it's got to be Volkswagen. Okay, I mean they're just hitting on all cylinders.
In 2013, Toyota was the world's top-selling auto brand, followed by General Motors. Volkswagen was third.